You don't need to be rich, you don't need a finance degree, and you don't need to gamble. Getting started in the stock market is a lot simpler than many people make it seem to be. And in this video, I'm breaking down how to get started in the stock market with just $100. Let's get right into it. I'm going to teach you how to get started in the stock market. If you're new to investing and you want to start making money with stocks, then you've come to the right place. So I'm going to walk you through the entire process of stock market investing. I'll give you market recommendations and I will make sure that you understand what you're doing. So step number one is that you need some money. If you don't have any spare money to invest, then you can't really invest in the stock market. So you could borrow money to invest in stocks, but I believe that would be risky and a bad idea for a person with no spare money. Okay, so how much money do you need to get started? To be honest, my answer is that you don't need much money at all. And you can get started with just $100 and that will be perfectly fine. So as a matter of fact, if you're a beginner, I would recommend that you start off with a small amount. So if you want to start off with $100, $500, $1,000, or a bit more, then that's perfectly fine. Now, this is extremely important and I really can't stress this enough. The money that you invest in the stock market should be money that you don't need anytime soon at all. So for example, if you're saving up for a home relatively soon, don't put that money in the stock market. Please do not do that. So pretty much think of it like this. Any money that you invest in the stock market should be viewed as a long-term investment. So invest it and don't touch it. Give it some time, let it grow, let it pay dividends and earn your money back. Literally look at it as a long-term investment. So if you want to invest in the stock market and you have money to invest, then we can move to step number two. So step number two is that you need to open a brokerage account. So a brokerage account, that's really just an app or a website where you can buy and sell stocks. So you would sign up for an account. It's extremely simple. It's just like open up a bank account. It's quick, it's easy, it's free. Just so you know, there is zero cost to open up a brokerage account. So as a matter of fact, many brokerage accounts will give you some money or some stocks as a promotion just for signing up to their account, just because they want your business. So you know how some banks, well, you may have seen this, they'll offer you some free money. If you open a savings account, they'll give you $200 or something like that. It's pretty much the same thing. So I'm going to leave you a few links down below for some brokerage accounts that are free. They're easy to use. They don't have any requirements and they offer a sign-up bonus as well. So after you open a brokerage account, then you will move on to step number three. Step number three, you'll open a brokerage account and you'll need to deposit money to your brokerage accounts to buy stocks. Some people transfer money from their bank accounts. So this process is very easy. At your brokerage account, you're going to see an option to make a deposit. You're going to enter your banking information and then you're going to make deposits, withdrawals. It's very simple. So after transferring your money to your brokerage accounts, then we'll move on to step number four. And step number four is really the most important step that you're looking for and probably why you're here, and that's to choose to buy stock. So once you transfer money to your brokerage accounts and now you're ready to buy stock. And as a beginner, I recommend that you do two things. So the first thing is that you diversify. Don't concentrate all of your money into one stock. That is extremely risky. So you can buy one stock at a time, but over time, make sure that you have multiple stocks in your accounts. And there's no magic number. It can be 5 stocks, it can be 20 stocks. Number two is to stick to the bigger stocks. As a beginner, stick to the billion-dollar, trillion-dollar companies that you're familiar with. Don't gamble with risky penny stocks. So let me clarify. As a beginner, you should invest in bigger name companies that you've heard of: Microsoft, Visa, Costco, Nike, FedEx, Allstate Insurance, Lululemon, CVS, and etc. So at least you have a rough idea of what those companies do. Do not buy risky, little tiny companies that you've never heard of. Have you ever heard of Adentex Group? How about Treasure Global? How about Akanda Corp? Now, I've never heard of those tiny little companies. I've never seen those products or services. If you don't even know what they do, just don't invest their money in their stock. If you really want to, you can research them, look for hidden gems. But as a beginner, I would just stick to the bigger stocks. If you don't know what stocks to buy, if you don't have the time to do the research, I would just recommend you buy an index fund or an ETF. if you buy an index fund on ETF, that has just a little bit of everything, and you just plan it safe that way. So not much can go wrong with the ETF because it tracks the S&P 500, some of the best companies that are in the country. So as a beginner, I would probably lean towards that ETF because that's a little bit better than index fund. So Charles Schwab, S&P 500, iShares, Vanguard, these are all great companies to buy. So step 5 is going to be how to buy a stock. So it really doesn't matter what stock you buy, it's going to be the same process no matter what stock you're trying to buy. So it's going to be, let's say for Ford, for an example, the stock symbol for Ford is F. The ticker symbol is F. So if you wanted to buy the car company and the price per share is at $1.01 per share, if you want to buy 5 cents of their share, then it would be, a buy order would be $55.05 a share. So in total, so for that buy order executes, you will now be holding 5 shares of Ford total stock in your brokerage. Okay, now moving on to step number 6. How do you actually sell that stock? So when you own a stock, you can sign it. You can sell that stock whenever you want. You can sell it the same day. You can sell it next month, next year. Whenever you want to sell the stock, it's totally up to you. You're the owner of it. So the goal somewhat is to want to sell it when that stock goes. So you want to make a profit from the stock. So let's say, for instance, the stock goes up $20 a share and you want to sell your 5 shares. Then you place a sell order of 5 shares of 5 Ford Motor stock and temporal symbol for $20 a share. Once you sell your share and your sell order executes, your Ford stock will go up to $100 in your account. So number 7 is how to cash out. So it's very easy to withdraw money from your brokerage account. You simply put in a withdrawal order. Most people withdraw money from the brokerage accounts back to their bank accounts, and it's free, it's quick, and it usually takes about a day to 3 days to get your money back in your bank account. So step number 8 is going to be taxes. So when the year ends on December 31st, your brokerage account will send you a tax form called the 1099 Consolidated. So you're going to receive this early to mid-February. So this is going to give you all the tax information that you need to report in your tax returns. It's easy, and this is nothing to worry about. So long story short, let me summarize it for you. If you don't sell stocks and then you have no taxes due. So if you just bought stocks and held onto them, you won't owe any taxes. But if you sold stocks, didn't make a profit, you won't pay any taxes. But if you did make a profit, you will have to pay taxes on your profit. So example, if you bought 4 stocks for $11.01 a share and you sold it for $11.01 or less, you won't owe any money. But if you sold stocks and you lost money, you will receive a tax deduction. If you sold stocks and made money, then yes, you will have to pay taxes in most situations. And if you get paid dividends, yes, that is taxable income. Now, in my opinion, investing in the stock market is a must, but you want to play it very safe. There are risks, and pretty much the sooner that you start investing, the better it will be long term. So again, like a snowball effect, the more you start to invest, the more better you'll get. But again, I'm gonna leave a link in the below for the videos. If you guys thought this video was helpful, please hit the subscribe button, like,